Let's take a look at your market news now. Hong Kong and Shanghai led a surge across Asian markets this morning after the United States agreed to suspend imposing tariffs on China for 3 months while oil prices soared on expectations of a big production cut. In a much anticipated meeting between US President Donald Trump and Chinese President Xi Jinping at the weekend, the heads of the world's two biggest economies hammered out a deal that will see them hold off on their tit-for-tat tariffs row, which has roiled global equities for most of the year. So while the early reaction was positive, observers warned there were still major issues that needed to be resolved. Tokyo's Nikkei gained 1% to close off at 22,574, while the Hang Seng moved 2.4% higher at 27,150 points. The Shanghai Composite took up 2.6% of gains to end at 2,654 points. Wall Street rose on Friday with the S&P 500 and Nasdaq posting their biggest weekly percentage gains in nearly 7 years. This came after the US Federal Reserve hinted at a more dovish approach to future interest rate hikes last week, and as investors hoped for the progress in the US-China trade dispute at a G20 summit. The Dow Jones Industrial Average rose 0.75% to 25,538. The S&P 500 gained 22 points to move to 2,759 points, while the Nasdaq Composite added a similar mark to close the day at 7,330 points. For more on the markets, we cross to Arabile Gumede at the Johannesburg Stock Exchange. Arabile, good news in the markets all around. Is it showing in the JSE as well?
It certainly is, Nzinga. Well, we were up in the United States on Friday, up in China this morning. Europe is also up, and so too then is South Africa's JSE. If you take a look across the globe, it seems to be a much better and a much more positive day. The tie clearly from me symbolizing what the markets are doing today. So a whole lot of green coming through on that front. Also seems to be a positive impetus for the oil price moving on a little bit further. It may not necessarily help us, but it is a boost for oil exporting nations. The JSE ending the month of November down 3.2%. So it's a positive start to kick things off for the month of December. Let's check in, however, on how the remainder of those local and European markets are faring. So nothing more than 3% gained thus far on the JSE this afternoon. It's a very, very positive day. So let's unpack all of it with Michael Traherne, Portfolio Manager at Vestact Asset Management. Michael, thank you so much for the time this afternoon. At 3% gain, that's very big.
Green on the screen. When was it 2 weeks ago when I was here and it was all red? So yeah. I'm loving all the green, and I'm loving the green tie.
Sort of tried to match in with the wall. Didn't expect it, but certainly came about really well. It was a good set of earnings then coming out of Naspers to have pushed them 5.5% thus far.
Yeah, so a mixture of the good earnings on Friday. It came out 3 o'clock our time, and Tencent being up 4% in Hong Kong this morning. But looking at the Naspers results, saying that they've got about $10 billion sitting in cash that they're looking for a home for. They've already spent $750 million over the last 6 months to do acquisitions. Their core areas are classifieds, food delivery businesses. So they've got a big shareholding in a company called Delivery Hero listed in Germany. But the most exciting thing about their earnings was saying the e-commerce division is now profitable for the first time. So that's a huge, huge thing. Spending a lot of money to get their market share. I'm thinking take a lot here. But profitable, which is a good thing going forward. It means that division is now going to be a contributor instead of a taker.
Yeah, particularly the one that was of key worry was the gaming segment out of Tencent, which obviously then infiltrated onto Naspers. How are they able to mitigate that? Because the rules are still strict and stringent though, aren't they?
Yeah, so it's still tough in China, but Tencent's showing that they're not a one-trick pony. They've got a lot of other segments. Part of it is cloud computing, which is doing really well. Listing a whole bunch of other subsidiary companies in New York over the last couple of 6 months or so. But the main thing when you look at Tencent and Naspers in particular is you want to add up all their different segments and work out what the NAV is. And Naspers trading around about 3,000 Rand a share at the moment. Once you do the breakdown, it should be closer to 3,500, 4,000 rand a share. So still trading at quite a big discount. I suppose as pension funds, we're lucky to hold them. And Naspers management saying that they do want to try close that gap. We're not quite sure what mechanism they're going to use to do that, though.
MultiChoice also adding quite a bit, significantly on its own, really to those to that uptick in numbers. Let's chat Sasol very quickly. It's up 6.5%, but it's not purely because Sasol is that great a company. It's more that oil price, isn't it?
Yeah, so Sasol's very much driven by how oil prices are faring. Obviously, their models around oil prices, so when the rand price of oil goes up, their profits increase as well because their production cost is fairly stagnant because they don't use oil as an input. Oil prices globally up 5% today, and that's after Saudi Arabia and Russia met at the G20 on the side, saying that they're going to cut production by over 1 million barrels. OPEC are meeting later this week. It's probably worth pointing out that Russia is not part of OPEC.
Yeah.
And so Saudi Arabia being number 2 producer in the world, Russia being number 3 producer in the world, them having a production agreement is very significant, and that's why we've seen the oil price go up. But OPEC meeting later this week in Vienna, and we probably expect to see more cuts coming out of OPEC once their meeting's done. So oil going from very much bearish, where there was a lot of oversupply, to traders saying maybe that's not going to be the case for the short term.
In some instance, is this good news in terms of the oil price globally, in terms of competition? Because now you find that OPEC almost loses some sort of steam.
Yeah, look, I mean, I think it's having a cartel for something as important as oil. I mean, oil's the input cost in just about anything, either if it's in form of transport, it just filters all this way through the economy. So as a consumer, I mean, even if you're an exporting oil nation, those economies need to shift to elsewhere. So having oil prices come down, I think, good globally. It means that the global consumer's got more money to spend, which then stimulates trade. And hopefully the thawing of the tensions between US and China go a long way to increasing global trade. And there's more than enough research that shows the more that two countries trade with each other, even if it's in different goods, the better both countries are. And that principle expands globally. So let's hope oil prices come down, global consumer has more money, global consumers better off for it.
Yeah, you speak of trade, that trade Trump truce, if you want to call it, coming through this weekend with China as well. It's a slight halt for about 90 days or so 3 months. It did, perhaps put in a slightly positive tinge to South Africa's currency, but across the board, how good a move is it? How sustainable a move do you think it is?
Yeah, so we've gone from where 2 weeks ago President Trump was saying if China doesn't come to the party, he's going to add more tariffs to Chinese goods and potentially increase the tariff amount on what's already being taxed, to now saying we're going to keep things steady for 90 days, and China saying they're probably going to roll back some of their tariffs, particularly on cars. So we've gone from a very negative case to almost a hold, and the market's now saying once we go from a hold, let's see this thaw, and hopefully in the next 6 months or so, all the tariffs that have been implemented get removed.
Very quickly, I just wanted to get your thoughts. GDP is expected out tomorrow for the third quarter. Some production numbers have come out, and of course even PMI as well today. But consensus is 1.9%. It doesn't shoot the lights out, does it?
It's better than a recession, Arabile.
This is true. This is definitely true. Michael Trahan, really appreciate your time there as we unpack the markets from Vestact Asset Management. A GDP number expected out of Stats SA as well tomorrow morning. So that will be of keen interest and something to watch out for as the market contemplates just where South Africa stands. Do we get into a third quarter of negative gains in terms of South Africa's economy? If that is true, it'll take us back to 2009. That was the last time we had 3 negative quarters of consecutive growth. That's where the buck stops today. The market is up, so hopefully it continues in that manner. Back to you, Nzinga, in studio. Right.